Good morning, ladies and gentlemen. Welcome back to another pre-market stream. Appreciate you guys tuning in as always. Do appreciate it. We're going to get started here in just a little bit, just a few seconds as always. Wait for a couple people to stroll on in. But yeah, pretty simple watch list today. Probably just going to be, again, mainly focusing on ICTI, AMD, and Tesla today. Oh, and MU. Probably going to look at MU as well. I think that could have a really good day too. So, good morning. Good morning, Kelly, Dave, Peter, Kane. Morning, guys. Good stuff. Yeah, we'll wait a little bit till we got some more people strolling in, then we'll get going. All righty, let's get into it. So first stock here that we'll talk about is AMD. We'll just touch on AMD briefly. So AMD was on our watch list, long bias on Monday, ended up having a long day, made a little bit of money on it Monday. Nothing too crazy, but still made some money. So on Friday, what you'll notice is the stock broke out. That's pretty much it. On Friday, we broke out of this top, and now we're kind of trending up. So today, it's pretty straightforward. You're just really following AMD for continuation to see if it'll have continuation to the upside. So it's a pretty straightforward play here. It's pretty much just going to be a long over the pre-market. If it's going to be a long move, the entry is most likely going to be just over the pre-market high with how it's set up for right now. Right now, we are in, kind of a bull flag. Let me do something here. Yeah, we're kind of in a bull flag pre-market. So we have the move up. We kind of pull back, right? So we're kind of doing a bull flag setup. So until the bull flag formation breaks down or is no longer accurate or valid, it's a move over the pre-market highs for now, okay? So you're going to be keeping a close eye on AMD for a long play, all right? Thank you, Mr. Zegradiznikid. I don't know idea what your name is. I apologize, but I appreciate you for calling me the man. You're the man. Thoughts on Apple upgrade? Really no thoughts. Apple's a buy. No matter what, Apple's a buy. Well, let me rephrase that. Pretty much no matter what, Apple's a buy, but really it's not a buy in regards to the market conditions we're in. And what I mean by that is at the price Apple's at now, I'm pretty positive you're going to see Apple lower than that price in like a year or 2 years. So for me, it's hard to buy Apple for investing, knowing that the price will be cheaper. So for me, it's like Apple's for sure a buy just when the time is right. And right now, I don't think we're in a good time to be loading up on long-term loading up, I would say maybe take a little bit here, maybe take a little bit there, just getting your feet wet with Apple. But I don't think I'd be going crazy on Apple right now. It just doesn't logically make sense with where the market is. And right now we're going into a parabolic market melt up, which if in fact is legit, could be very, very bad for the market. Because if you're going into a market melt up, it's really the same exact thing as a panic buy, but just the opposite. So you know how bad a panic sell can be. A panic sell is like 2008. A panic sell-off is like when everybody buys a penny stock and then they're all wrong and they all sell it at the same time and the penny stock crashes. That's the same thing we're seeing, just in the inverse. It's called a market melt-up or a melt-up buy, where it's just a buying frenzy because everyone's so high on life and they don't realize what in the hell they're actually doing. So they're just buying up these ridiculously high evaluated stocks, and they're just pressing this market up higher and higher and higher and higher and higher. So what ends up happening is once you run out of enough idiots to keep buying up that market, it then just rolls over and drops. Because I'm not buying the market. I mean, I might be doing a little bit of buying, but I'm not truly buying and investing in this market. I'm just kind of I'm on standstill, right? So until we have pretty much most of the market on standby, we'll probably keep squeezing up. So basically the concept of a market top is you've run out of enough idiots to keep buying the market when the market stops moving up, right? When the market's really low, that's when a lot of intelligent investors come in and start buying it up. When it gets really high, that's usually the idiotic and, stupid people investing. And when you run out enough of the stupid people to invest, then you've reached the top. So we haven't quite reached that top yet. Okay. Yeah, that's AMD. Let me read a couple questions here. So yeah, Apple nonetheless. So Apple, in my opinion, is 100% a buy. The easiest way that if something is a buy is you simply, rather than looking at a stock chart, rather than necessarily looking at their balance sheet and things like that, or earnings, Go out in the public and actually use your brain, okay? Like if you go to Apple right now, if you were to walk into the mall, I guarantee you Apple is probably going to be the busiest store, whether it's Christmas holiday season or not. Apple is going to be one of your busiest stores in the mall. The day that Apple starts to become one of the not busiest stores in the mall, or it no longer is the busiest store in the mall, that would be a time at which you would start to consider maybe getting out of Apple or thinking that Apple could be going through a downturn, or Apple's competition may have increased and they're no longer the leader in the market. That's when you know when Apple's starting to get weak, when people aren't showing up to Apple Store anymore. But you have to make sure they're not showing up to Apple Store because they're no longer purchasing those products. If somehow Apple's products all go from a physical product to a non-physical product, then of course nobody's going to be walking into their stores. So again, you have to make sure that your due diligence is there. But at the end of the day, always look for where customers are. Right now, customers are at Amazon, customers are at Apple, et cetera, et cetera. You know where the customers are. Follow the customers, follow the money. Alrighty. Okay, awesome. Cool stuff. So next one here on the list that we'll talk about is MU. Yeah, okay, sure, MU. Okay, here we go. So this is MU. If you notice MU from last week, it had its earnings report here, right? And then even that day, I'm like, this is what's going to happen. Either we break out of this channel or we break out of the down channel. So you're either looking at a long or a short below these channels. And we dropped below briefly, but we kind of traded back in. So we kind of just stayed in between that channel and never really had a breakout. Following day, tries to break out of that channel, gets knocked back in. Today, we're getting over that channel slowly. So I think today we could be looking at a long. So kind of walk through this with me, right? So we have the channel. Let me delete this top one. Top channel, bottom channel, or top resistance, bottom support, whatever you want to call it, right? So we have the move below, gets bought back up into the channel. Following day, move above, gets sold back into the channel. Today, pre-market, we slowly grind just above the resistance top channel. That could be a good sign for a long because you got to think about it. Right? The stock on, so now you're like, well, Connor, the last time we got up and over, it sold off. I'm scared. Okay, sure. It did sell off the last time. But what is different about last time to now? Not that it's going to have a great move or not that it won't sell off, but you have to think, what is different from last time to now that could possibly change my mindset to wanting to be more long bias on this? Okay, well, think about where the move started last time to where the move started this time. Last time, the move started from down here, shot straight up just like that. It already had a really good move before it got over the resistance. Today, instead of starting down here, it really started from right here. And we slowly grinded over. We did not shoot straight up. The faster and more aggressive something goes up, the more likely and more susceptible it is to coming right back down. Fast move up, right back down. The slower something goes up, the slower it will come down. And the slower something goes up, the less susceptible it is to seeing a really fast reversal price action. So MU last time spiked straight up, comes straight down, starts from way lower, goes straight up. Here we start up a little bit higher, we move a little bit higher, and we don't do it so fast. This could be a good long play today if the price action stays above this 55 kind of 55.50 level, call it. So I think MU could be set for a pretty decent day as long as the market has a good day and so on and so forth. Okay, MU, watch it. Tesla, next one on the watch. So Tesla put in a high Friday here at 413.99. I would say if Tesla can stay above 413 to watch it long bias. There is something else to pay attention to, I believe. Let's see. No, not really. Never mind. Yep. So as long as Tesla's staying above Friday's high of about 413, I would remain watching it long bias. If Tesla starts to break down below 413 and close below 413, then I would start to be a little bit hesitant, standby, or bearish for the time being. Okay. Hypothetical, if I don't like my portfolio and I'm down 4% year to date, should I sell all my stocks and start over, hold, or just keep going? So that's really Annie, that's a hard question to answer because there's a lot of scenarios there. Basically put it I'm going to try to give you a really generic example. If your portfolio is down, so let's say Connor, myself, I have let's just say, just make it really simple. Let's say I have 2 stocks in my portfolio, Netflix and I don't know, something, it doesn't really matter. Netflix, Facebook, Nvidia, Google, whatever, just 2 companies. And we're getting close to year end and I look at my portfolio and I'm down 4%. So in my opinion, I go, do I hold because I'm down? Right? So the first question you ask yourself is not because we're coming to year end. First, you look at your portfolio and go, do I like these stocks? And why did I first buy these stocks and why? So there's a difference. If you're invested, it's completely different. If you're trading, it's very different. So the first question would be, is it investing, right? If it's investing, then what I'm going to say makes sense. If it's not investing, then we're not even going to get into it. So I'll give you the example as if you were an investor coming into year end and you had negative 4% return overall in your portfolio. That's a scenario we'll go with it. It's all about investing. So if you're investing and you had 2 stocks in your portfolio, even if you had 10 stocks in your portfolio, it doesn't really matter. If you had 5, 10 stocks in your portfolio, you're down 4% coming into year end, and you're going, should I sell, take the loss? What do I do? So the first question you ask yourself is, why am I invested in these stocks? Why do I like them? Do I still like them? Do I still see potential for them? If the answer is yes, then you wouldn't sell the stocks, plain and simple, okay? Then the second answer you ask yourself would be, okay, if I do want to sell these stocks because of whatever reason, should I sell them before year end? Because you can write off losses per year. So if you have, if you look at your portfolio, you're down 4% and say you're down, let's say $2,000 altogether, you can actually write off those $2,000 in losses against your taxes, essentially. You can write them off against your income and be tax less, essentially. Okay? Again, only if you had like 2 stocks, maybe 10 stocks, because there is something called a wash sale. There's a wash sale rule. It's basically the government always trying to help you. Again, like we always mention, we love the government. The government is our friend. They always help us as much as they possibly can through taxing us like crazy, making it really, really hard to live in. That's pretty much it. Their main job is to make it harder and harder for you to live every day. I know it doesn't seem like that, but at the end of the day, that's pretty much what it comes down to when you pull back the covers. They make it really hard for you to live, and without you, the government can't stay alive because all you really are at the end of the day is a tax slave working for a for-profit government corporation. Remember that. So again, there's a wash sale, which basically states that if you buy a security, accumulate a loss, sell it, and then buy back that same security or a security that's similar within a 30-day period, then you're no longer able to write off the loss that you already acquired for that stock. So if you're an investor coming into year end, you're down 4% and you're considering of selling, consider if you are going to run into the wash sale rule. That might be a little bit complicated for you, but basically the only reason you never want to sell before year end because you're down is if you don't see your stocks going up, you see them going down, and you'd like to just sell, get out, and then just write off the loss that you can for this year's tax season. That would be really the only reason. Okay. Can you write off retirement accounts? No, you can't. You can't write off. You can't write off retirement accounts. No, because again. So here's another thing. I'm gonna make this real quick. Right. The question was, can you write off retirement accounts? And the reason I say that you can't, and you might be able to in some situations, but the simple, straightforward answer to you would most likely be no. Because, again, what you have to understand about, and I'm going to do some videos on this here soon because really there's just not enough people that know about these things, and everybody that seems to teach 401ks, Roth IRAs on YouTube always forgets one big main talking point, and that might be because they don't even actually understand them fully, is that when you look at a 401k, a 403b, a Roth IRA, an IRA, a SEP IRA, I mean pretty much any sort of investment vehicle. Remember this. If there's one thing that you take away from today, it's this. 401ks, Roth IRAs, IRAs, SEP IRAs, not an HSA, but 403bs, pretty much all of those terms that I just said, all they are what's called investment vehicles. And those investment vehicles are just laws. That's it. When you have a 401k, a 403b, or a Roth IRA, all you are doing is abiding by a certain law. That's it. Same thing as a speeding ticket, the speed limit, a stop sign, a yield sign, don't murder someone, assault and battery. Those are all laws, and it's the same thing for a 401k, Roth IRA. All you're doing is following a law. If you break that law, you will be fined and penalized. Just like if you speed, you break the law, you will be fined or penalized, possibly even go to jail. I know, crazy. I can go to jail because I wanted to travel a certain amount of distance in a certain amount of time. I had to be to this place at a certain amount of time. And if I went this fast, it would allow me to make it to that distance in a certain amount of time. But the government came along and they put a max on the amount of time that essentially you can go from point A to point B. And if you abide by that, you're good. But if you break it, then you get fined. Again, as I mentioned, all a 401k is and all a 403b is are just laws that you're specifically using to follow as an investment vehicle that the government has allowed you to do. And then when you go into the nitty-gritty of them, you realize that it's all actually just to favor the government more than it is the actual individual. And that's why I always mention that the government is always on your side. They're always trying to empower, give more liberty and freedom to the individual. And that's why they create things like 401ks and 403bs, and they trick you into using them. They don't really trick you, but when you use them, it's benefiting you, but it's always benefiting the government more at the end of the day. And we'll go into videos like that later, okay? So next thing on the list that we have to talk about. So we went over MU, we touched on AMD, we touched on Tesla. Now I want to take a look at ICTI, and I actually forgot I still have a position in this, and I could be red on it now because I wasn't even paying attention that whole time. Let's see. ICTI? Wait, ICTI. So I must have said it's ITCI? Yep, ITCI. So I did actually go red there a little bit on that position. I'm still up $44, so that's good. I'm glad I just touched back in with it right now. Down about $5. So we'll close out. Hold on, give me a second. I'm going to close out these 25 shares just so that way. All right, let's just do this. Oh, hold on, give me a second. Oh, here's a good lesson. Everybody watch my screen right now. If you want to learn how to trade pre-market and aftermarket on Thinkorswim, then shut up and pay attention, because I've done this about 1,000 times in my career, and I get asked every day. All right, you guys ready? You ready? It's so simple. It's super simple. What you're going to do is you're going to pull open your active trader window just like this. Click. Then you're going to go up to the gear icon. Click the gear icon. You're going to go into this search bar where it says look up button. You're going to type in TIF. Click TIF, highlight it, hit add item. I've added the item. Sweet. Hit OK. Now you will see TIF here and day. In order for me to make this trade on ITCI go through during pre-market, I need to change this order from day to GTC EXT. That stands for good till close through extended hours. If you're trying to trade pre-market and after hours and your order never goes through, it's because you're classifying your order incorrectly and the system doesn't know any better than to just reject your order. Okay, so if you want to trade pre, post, aftermarket, you need to change your order window to this. See if I can get out there. Let's just do this, auto send, bam. All right, so I closed out that order. So again, in order to trade pre and post after, you're going to have to do exactly what it said. Make sure it's GTC EXT, good till close through extended hours. Okay, cool. Yes, and also during pre-market and after hours, it's only a limit order. You cannot do market orders. And the reason you can't do market orders is for another discussion. That could take you guys down a really big rabbit hole that, again, just could take a long time to explain, and we just don't have the time for that. Okay? So, ITCI, I'm up $42 on it. Anyways, so now what we have so far developing is a bearish head and shoulders pattern currently. Is it going to hold up and go full bearish? We don't know. But if the stock price does come back up above $24, then the head and shoulders pattern is no longer legit, and I wouldn't consider it bearish. So there's really one main takeaway from this. The stock has gone from 12 to 25. It's already up 100% on the day. That's a big move. Secondly, they have strong news about an FDA approval of something of a schizophrenia drug. So they've had good news out regarding schizophrenia. What'd you say? Are you talking to me? No, you can't be talking to me. You're not talking. See, like that. They have drugs that are helping that scenario where people are talking to themselves, right? Serious stuff. So anyways, that's really good news, and the stock is up pretty big, okay? There's something that most people don't even realize. That is that this stock is easy to borrow. I'm not going to go into the full details of why that matters for right now, but just know that this stock can be shorted. So if you want to short it today, you can short this stock. Next question is, do you really want to short that stock? That's the more important part. So this is an easy to borrow stock. We'll be watching it both long bias and short bias today. Yeah, got you guys. Yeah, got you. See, we don't only talk about stocks here. We have a good time. We have fun. We talk about retirement. We talk about how the government's your best friend and they're always trying to give you more freedom and liberty and make you a strong individual because we know that's their job, right? We know that's what they want to do. Sarcasm's a son of a bitch, ain't it? Anywho, this is a great morning. I didn't get much sleep, but I feel great. And I've already made $42. I can basically just retire now. Okay, so real quick, this is the most important thing in terms of the technical side of ITCI. If ITCI gets back up and over 24, so until ITCI can get back up and over 24, I'd be on standby to bearish. And I still wouldn't even be really bearish because what I mean is I really want to see an attempt of ITCI to get back over 24. If it fails, then I might get more bearish. But until that, I'm really just kind of on standby for right now. Alrighty then. Would you buy VIXI now? Volatility is pretty old. Soldier Boy, that's funny you asked that. I have a really great article that you should read. I think that there's an article, it wasn't online, I printed it out. Maybe what I'll do is I don't really know, but I have this really cool article on volatility that I read a couple weeks back. I always read, different things here and there, even though I don't know everything. So whenever something new kind of hits the market or someone recommends a really good article to me, or a paper or some research, I'll usually read it. And anyway, so there's a really cool article I read on volatility recently, and it's a printout. So I'd have to find a way to kind of copy it and then make it available or somehow try to send it out. It's not like plagiarism, or I wouldn't be spreading, I wouldn't be selling somebody else's stuff or anyway. It's already out there for free anyways, but it's a really good article. Maybe I'll find the name of it and send it out to you guys on the next stream, and that way you can just find it yourselves. It might be easier that way. But anyways, really good article on volatility. And to answer your question, Soldier Boy, it went on to explain the exact question you're asking, which is, should I buy volatility basically because volatility is low? And it really basically goes on to saying, no, that's actually a really bad strategy to get long or be short the market just because volatility is low. And it is, statistically speaking, it actually said that it usually would lead to losses more than it would lead to a win, because in a sense, just because volatility is low does not mean volatility will increase. It was kind of it was kind of like the catch-22. And it was, just because volatility is low does not mean that is going to, just because volatility is low does not foresee volatility increasing in the future. And it went on to actually talk about standard deviation. And I don't know if any of you guys even know standard deviation, but standard deviation basically has to do with statistics. And it's a formula that allows you to figure out the standard deviation between the mean. And I might be losing you guys already, and I'm not even a big pro at standard deviation, but again, the VIX, a really good strategy that is used is looking at the standard deviation over the course of whatever, and that's how you actually get really good with the VIX. I'm probably just saying stuff that doesn't even matter. It probably confuse you guys more than anything. So the answer to your question is no. Just because volatility is low does not mean that you should be taking positions to be long bias volatility or short bias of market just because volatility is low. Greetings from France. Greetings from Michigan. Howdy ho, neighbor. Are you able to snort stocks? I don't know, Bubba. I don't know. That's what I said, but that's not what I meant. Are you able to short stocks? Yes, you can short stocks, but not when they're hard to borrow. And yes, you can short stocks. You cannot short them when there's no shares to borrow or it's NTB. You can short them when it's hard to borrow, but you have to join TD Ameritrade's Hard to Borrow program. And if you're not a part of their Hard to Borrow program, then you won't have access to the stocks that show hard to borrow or HTB. ITCI, yes. Also, yes. Thank you for the info. Yes, awesome. Good stuff. Your ticker is wrong in the title. Ronnie, you know what, Bubba? Thanks for that. Really appreciate it. Your ticker symbol is... Could you go over cost? No. I am in Novi. Hello from Alaska. I was supposed to take a trip to Alaska with my parents this year, but it cost $3,000. And I'm like, do I really want to spend $3,000? And I don't think I do. I love my mom and dad, but I don't think I want to spend $3,000. Maybe I will. Maybe. Can you start with $100,000? Yes. You can start with $5. Yes. You can start with no dollars. Kind of. Yes. BA halted pending news. Okay. SRPT, big mover. Yes, SRPT did move a little bit today. It's so warm in Alaska. It's so cold here in Michigan. Check GS chart, please. Goldman Sachs. Puke all over me. Anytime anybody wants to look at a bank, I just want to puke all over myself. Because banks are... we can't even go down that road. Okay, so Goldman Sachs recently broke over some tops. Yeah, I mean, never really even retested. I mean, I'll just be straightforward. I wouldn't trade Goldman Sachs. Does it mean that it's not going to perform well? No. But if you're looking at Goldman Sachs, for the retail trader, the most obvious buy would have been like right here at 224. So you're already late to this move, and it's already kind of broken out of this top, and it's already retested. So I think for right now, there's really not a particular setup that I would be trading for now. I wouldn't be trading that or buying it for right now. If I were to buy it, it would have to be over your next resistance mark, which is like 233.85. Banks are, they're scams. I mean, at the end of the day, a bank is literally a scam, no matter what way you look at it. Okay, so they're basically kind of a scam. And then they literally are above the law. I really would love if everyone just started slowly pulling all of their money from banks and then just switching to credit unions. I mean, credit unions are great. Banks are shit. Plain and simple. And the best way that I can explain it is if banks are so good and they're so for helping the people secure their money, make sure they have access to their money, then why is it when you walk into the bank and you want to pull out $100,000 of your own money, they don't have it for you? Or they say you have to go through all these loops and jumps in order to get your money because it's no longer your money. It's the bank's money. That's the first and most important rule about using a bank. Once you sign up, and you say, here's my, nope, yep, it's their money now. You have now given away your money, and you no longer have any. You've forfeited your money for once. And all the money you own, you don't even own in the first place. Just like your house. Again, the government owns it. You own nothing in this life. The government owns you so far. Again, I know it seems like they're trying to help us, but really they're not. And the sooner you learn that, the better you'll be able to manage life and understand when you need to make sure that you grab the lube and take it out of your house because you're probably going to get bent over that day. Makes things a little bit easier. You'll never, ever be able to avoid getting bent over, but you can make the process a little bit more soothing with a little bit of lube. Okay, just remember that. So So banks, as soon as you give them your money's gone. And if banks were really that good, then look back to 2008. Why would some of the banks fail, and why did they have to get bailed out? If they were really such good companies and they really knew what they were doing and they were for the people, then people wouldn't have lost their money in '08 through the crash. The housing market bubble would have never happened the way it happened. The government let the housing market bubble happen. They knew it was happening, but they knew there was nothing they could really do about it. They just had to let destruction and chaos actually happen because it was going to happen inevitably, and the government knew about it before it even happened. Again. Okay. But again, I love the government. They're my friend. I love them. YouTube, don't censor my channel, please. Okay. It's 9:08. I got to run. Got to get back to my private group. So I appreciate you guys all tuning in today. As soon as we get down here with this stream, again, the next stream will be back online. That one will be the scanners and the high-a-day scanner. That should help you guys find some penny stocks, so on, yada, yada, yada. We're going to have some half days here, anyways, but I won't be on every single day this week. I may or may not be on a couple days. I don't really know. I work for myself. I get to make up my own hours. If I don't want to be on, I don't have to be on. I enjoy you guys coming and staying with me, and I enjoy and love doing this as well. So I'll see you guys throughout the week. Everybody have a happy holiday. If you're one of those kind of people that gets all butthurt about saying Christmas, sorry, but happy Christmas, happy holidays, whatever floats your boat, happy Hanukkah, Kwanzaa, all that good stuff. Everybody take care, have a great day, and I'll see you guys all tomorrow.